next panel, investors. So we have to talk obviously about what's happening in the funding industry and so on. Excellent panel, and moderator is Mike Butcher. So if Mike can join me on stage, with Mike you never know, because maybe he's arriving, maybe he's not. Yes, he's coming. Here is Mike, and I'll let Mike to introduce his guest. Hello, welcome back. All right. Here it is. Yeah, no worry. It's coming. All right. Put some chairs for Mike.
Yeah. Some enchanted evening. So everyone having a good time? Who's been to the Startup Alley to have a look? Who's actually got an exhibition? Who's actually got a stand at Startup Alley today? You're not. You're there all exhibiting. You're out here watching us. Okay. Fine. Okay, let's get the panel out. Come on, guys. Now, we're going to have to do some microphone sharing, but we'll start off with, who is, you haven't got a microphone. Let's just have a quick introduction. Nenad, if you could introduce yourself to everybody.
Sure. I'm Nenad Marovac from DN Capital. We are an early stage and growth investor in Europe and Silicon Valley. We have about $250 million under management. Some of the companies we've invested in are Shazam, OLX, where Fabrice, I think, is somewhere here, as well as many others. And we really focus on backing great entrepreneurs and would love to find something in Italy.
Hi, it's Massimiliano Magrini. I'm the founder of United Venture. It's a VC fund in Italy. We invest across all digital new startups in Italy. We already have 4 companies in our portfolio.
Hi, I'm Rob Moffat. Used to work at Google with Massimiliano. Now at Balderton Capital. Probably half the room knows my partner, Roberto Bonanzinga. We've been around for about 13 years, invested in early stage in European tech companies. Ukes is one of our sort of best investments to date out of Italy. Also invested in companies like MySQL, Wonga, Bebo. Yeah, so I've been lucky enough to back some great entrepreneurs. So,
gentlemen, I think what a lot of entrepreneurs want to know right now is what's interesting to investors. It's 2013. We've got to the point now where we've had basically an entirely new wave of technology companies come through the pipeline. The days of the Web 2.0 phrase have actually borne out some amazing new companies in the consumer space like Facebook and Twitter, in the enterprise space, companies like Huddle out of the UK, for instance, and many others that we could reel off long lists. So it's quite clear there's a structural movement towards the cloud, and investors have been taking advantage of that. And where we are now in 2013 is, and we've also have some IPOs under our belt, LinkedIn, Facebook, etc. So what's going to happen in the next 2 years? Are we going to see a period of consolidation where investors sit on their investments and don't do many new deals? What's the difference between, we won't have to dwell too much on this, but how can we become more competitive in Europe with the Valley, for instance? But what are the things that you guys are excited about? What are you looking at? What is it? Healthcare? Is it games? What are you guys looking at? What are you looking for, Rob?
Okay, that's a broad question. I think what we're looking for, more than sectors or themes, we're pretty allergic to the idea of sort of saying this year is all about Internet of Things, or this year is all about health dongles.
Usually,
to measure
for about
blood.
10 years, it's always been this year is going to be the year for mobile.
Mobile payments. This year is the year of mobile payments. So we hate that kind of stuff. I think what we like is just the speed of getting things done. And the speed and efficiency of getting things done. And that's just accelerating. You can set up a startup now for nothing. You can host on Amazon. You can use a whole bunch of tools. You can get an original idea to market in a very short space of time with a great team. for very little money. And I think that speed is going to accelerate. I think there's plenty of seed money around in Europe. I think that's improving. There's more and more early stage funds like United and probably another sort of 10 probably formed over the last few years, plus some sort of good sort of high net worth angels. So I think the seed investing is kind of really picking up. And then it becomes quite Darwinian after that, I think, because you get the seed investing and people expect you to really hit traction with that seed investment. And if you hit traction with that seed investment, then everyone is all over you. It's so public now. Everyone can track your data. Everyone can track sort of the buzz around you. If you become a hot startup, then everyone will be chasing you, whether it's from London or from Berlin or the Valley. If you don't hit that traction, then it becomes tougher.
That's a good point. The tracking thing is now very, very obvious. I mean, how many people here know Angel? You don't have to put your hand up, but many people here are aware of Angel List, for instance, or Crunchbase. And these are kind of global platforms now where startups are able to list themselves and be able to be tracked by investors. But Nenad, are you equally, broad in your outlook? You're not looking for one particular thing?
No, we've done 15 deals in the last 12 months, so been very, very active.
Hold the mic closer.
Seeing lots of very different things. One company we've just backed is a Wi-Fi domain registry. So on the internet today, you have your URL. In the future, you might also have a URL for your Wi-Fi hotspot. So if you want to have Nenad's Wi-Fi, you register that, and no one else can have it. And this is actually very important if you look at some of the trends in cybercrime, where people with the same Wi-Fi hotspot name can tap into similar ones just by the basis of having the same name. And as you look at cybercrime, which is actually almost as big as regular crime today, this is going to be a very big issue in our lives, and actually startups that can actually counter that will be very interesting. But I guess some of the interesting trends we like marketplaces, we like internet brands. So if you look at Bonobos or Warby Parker, which are brands that have created on the internet, there's no shops. You can't buy things in a shop. It's all created on the internet. We have a company in Berlin that does Italian shoes online, Scarosso, and they're run by a bunch of German guys, but the margins are fantastic, and everybody wants Italian shoes like a Todd's, but half the price and delivered in 2 days to your house. Coming back to this angel list thing, though, and the whole angel phenomena. So the angel thing, I think, is fantastic, but it's not a replacement to venture capital. And actually, I think Yossi was talking about it yesterday, about the incentive or the attraction of some entrepreneurs to take a lot of money at a very high valuation early on, which can then actually kill the company because it makes it unattractive to a VC later. And so I think, to the entrepreneurs in the room, you have to be very careful who you take the money from, because if you get a very high valuation from Madonna or Lady Gaga's, family office that pays you a valuation 10 times what the VC is going to pay, later when you need real money, and they're not, they give you 250K or 300K when you need millions, and you've raised money at 30 pre, and actually you're worth 5, it's a very difficult discussion. So I think these sort of networks are dangerous, and I think there's going to be a hell of a lot of blood in the next 2-3 years, because who's going to do all the Series A's in Europe? The number of VCs in Europe has contracted 80% since we started business. And you go by country, I mean, Italy, how many Series A investors do you have actually on the ground? 2, 3, maybe, maximum? So I think it's a very interesting trend we're going to see in the next 5-10 years.
That's perhaps you could speak to that, because that's an issue time and again with startups. It's, you get traction, the guys are really good, the team is good, the entrepreneurs are good, and they're doing very well. But then getting this follow-on round, getting to that Series A, and then being able to really motor, launching in the US, getting internationalization, that's a really big leap, isn't it? I mean, people talked about the Series A crunch last year a lot, especially in the Valley. Here, I don't think we've ever had a Series A crunch. We just have a Series A sort of ongoing issue, sort of historical. What's your perspective?
That's exactly the point. I mean, what he was saying about overall Europe, it's even more important about Italy, because there is a lot of buzz around seed and angel investing, but whenever it comes to do Series A round in Italy, there is nobody left there. And in particular when it comes to technology, so there is not I mean, we started a United Venture with the intent of becoming the lead investor in technology in a Series A round. Because if you look around, there are more later stage tactical fund covering different areas, but there was no specific fund focused on technology. And it's very difficult that a fund will understand exactly what's going on in technology if it's not focused on technology and is covering all the assets. So I totally agree with this point. Nevertheless, I think there is a great activity here in Italy at the moment, and our mission is really to become the point of contact for all the stages. We are stages agnostic at this stage. Agnostic at this stage. And also, when it comes to later round, it is very important that at an Italian level there is a lead investor, because otherwise it's very difficult to attract co-investors from other countries of Europe and in the US. And definitely it's even more important for those companies who want to go and raise money elsewhere to have a strong local investors. So we strongly believe that there is the need for having strong local players in the market, and that's the reason why we started United Ventures. In terms of what kind of initiative we are looking for, I mean, we are really focused on the consumerization of enterprise. In Italy, there is a strong culture of making technology for companies. So we're trying to benefit of this track record of small company making good software for large enterprises. So we would like to help those companies and going to market, not on a traditional basis being sold one-to-one to large companies, by benefiting from the consumerization of the enterprise and becoming a large company, getting distributed over the platform. And the good thing is the more platform we do have in the market, like you are mentioning LinkedIn and Facebook, and the grower is going to be the speed at which those companies can be distributed and can reach critical mass.
But it's interesting, we've got, Italian firm here who wants to do a lot in Series A over the next few years, and we've got two big funds either side, both based out of London. To what extent can European investors cooperate more going forward and do syndicate deals amongst VCs? I mean, one of the issues with entrepreneurs, often they have to find a VC who's going to lead around, and that seems to be often, you can end up with 5 potential investors, they all want in, but, nobody's quite ready to go do the lead. How do you break that lock to some extent? And are you going to be able to work very, very sort of collaboratively with international VCs outside of Italy?
I mean, that is the goal, and it goes down to the fact that in the US it's one country, in Europe there are many countries. Different is about people, understanding culture, so we just need to make sure that we definitely collaborate more between each other. And I was in Berlin last week, and there was a group of European VC talking about, co-invest and trying to, it goes down very to the intimate of people getting to know each other, because it's a personal thing. It's nothing.
Do you think it's still early days for that?
We are at a very early stage of that, but it's a goal that we need to think about European and not to think about Italian or UK people or German. I mean, that's the point.
So Monty and I were talking about that last night, and if you look at the venture capital business in Europe today, I would say 13 years ago, it really did not exist, okay? It really started with Benchmark coming over into Europe, Excel also opening an office, and then Index. Index is a very young firm. And so I used to work in private equity. And when I started in '95 in London, venture was just a bunch of scientists wearing white suits and next to accountants. And that's completely changed. And if you look at what's happened in Berlin, I mean, how long has Berlin been going on as a startup? Probably since the Samar brothers sold Jamba, right? That's when they moved to Berlin, started Rocket, and now it's taken off. So it's less than 10 years old, Berlin. So Italy needs to copy what some of these other countries are doing, especially in Berlin. UK, you have Silicon Roundabout, where the government is putting so much resource, so much money into creating that ecosystem.
Well, I think it was all quite organic to begin with, and now they're bolstering it, aren't they?
Okay,
yeah.
But so far I haven't identified one hub in Italy. However, in Silicon Valley, Michael Volpe is Italian, Roberto is Italian. You have some amazing Italians outside of Italy that have performed extremely well. So get these guys to come back and do an event once a year, which is very high level, bringing the best startups, the best guys from Italy, from all over the world, as well as international, and like a DLD, because DLD for Germany is extremely important for the ecosystem. I mean, everybody who's anybody in technology is at DLD in Germany. And in London, it's Founders Forum. So Italy has to have a similar event. And I think that will, you know, and then it becomes competitive. You want to be invited to that event. You want to be, you know, the company, the CEO of the company that's succeeding at that event. And then I think it can start. And I think, look, the Italians, look at cars. I mean, Ferrari, Lamborghini, the best cars in the world. This country should be producing more really high-level startups. So I would bet in 10 years we're going to see some good companies come out of Italy.
So there's an issue about clustering and location. I think that it's hard. I'm actually going to talk about this a little bit later on, my experience of watching this happen organically. But I mean, of course, hopefully TechCrunch Italy can be part of that kind of new series of events that bring investors to Italy and you know, some of the leading startups. But what about your perspective? Because you've you get to go to Berlin a lot as well yourself. I mean, what are some of the key learnings that you've observed happen over the European ecosystem that have really supercharged things, maybe in Scandinavia
I think,
or
yeah, I think the hub idea is helpful, right? Having other people around who are good entrepreneurs and have good complementary skills, I think that definitely helps. And to have that in one hub is very helpful, right? For that to be Berlin in Germany is very helpful. So I think clustering around somewhere is important. And it's around the skills, right? To make a good startup, you need a great tech team, you need a strong CEO, and you need a good marketing team, minimum. You probably also need sales and a bunch of other things, and be able to find all those talents in one place. I think the big thing that changed in Berlin was attitude. Suddenly, everyone in Berlin thought they should become an entrepreneur, and they thought they could make it really big. And there was a sort of strange attitude change, I don't know, 3-4 years ago, and it's hard to say what caused that, whether it's the Samwer brothers or Jamba or sort of people like Wooga and SoundCloud getting big funding rounds. But then suddenly everyone thought, I'm going to build a big startup and I'm going to make it global. And that mindset shift. And when you sort of go around Europe, there's a lot of entrepreneurs I talk to who just sort of have taught themselves into that they won't raise money from a London VC, or the only way they'll ever make it is if they move to the US, or they should just focus on being a sort of small-scale company. And I think that sort of attitude change is really important, and it's crystallizing that is hard.
Where do you think the hub is in Italy?
At the moment, I mean, it's split between Rome and Milan, but it's pretty spread all over the country. Funny thing is that yesterday there were 4 entrepreneurs in Italy who have made exit above 300 million. I think they made more value than most of the Samwer brothers companies. So the thing is that in Germany they are selling it very, very well. In Italy it's totally undersold. It's really at the beginning, but it's totally undersold. This ecosystem needs to present and show itself for what it is, and it's much better than it looks like from outside. The German model is fine, although if I were to choose the model, I'm not sure I would choose the Samwer model. I mean, I know it's successful, it's buzz, but if I have really to choose one model, I would go for a different one.
Which one would you choose then?
I'm not advocating the Samwer model, but if you think about Berlin, I heard a statistic that 7% of the population in working population in Berlin works for a rocket company. Now think about that for a second. That's incredible.
7%?
So something like 5 to 7% of the working population in Berlin has worked for a rocket company.
Okay, we're going to have to check that figure.
Check that data. So
that's
that's pretty amazing, right? I mean,
city of 3.5 million people. So
that's a good point. There's people spinning
there is like 50% unemployment in Berlin, right? I mean,
one of the things, though, I don't want to talk about Berlin all the time, but one thing point we should make is that basically in Berlin you've got nothing. It's a poor city. You know, as the mayor famously said, we're poor but we're sexy. And in Berlin you've got coffee shops, artists, and the government, and the civil service. Nothing else. So and internet access, right? Which is, you know, whereas in London. Now, London is completely different. Basically, you've got advertising, media, technology, finance, medical, enormous numbers of industries competing. Berlin, you've got nothing, and so it's a kind of a blank sheet of paper. This is an issue which, for a lot of European centres, like Paris, for instance, where you have lots of competing industries, especially for talent. So if you're a young graduate coming out of school and you think, right, shall I go and join this bank or shall I go and do a startup? Well, if you're in the city and you're going to make 50 grand as your first salary, often they'll just go into the banking system, right? And I think that's a European problem generally, especially about our aversion to risk. But let's just come up with a couple of other ideas. You had a very good idea, I think, Nenad, about getting this high level of engagement. And I think you're right. Really, in the scheme of things, it does feel very early still. I mean, Founders Forum has only been really opening up over the last less than 4 years. I remember as a journalist, I was only invited to Founders Forum in London 4 years ago for the first time. So it's still early days. We can't be too hard on ourselves, and I think often we need to remember that the Silicon Valley had the Manhattan Project and the nuclear, the atomic bomb, and 50 years of technology development around the military-industrial complex, even before it had a Silicon Valley as such. So we can't be too hard on ourselves. We're just getting going here. But one of the things that I think a lot of people here might want to hear from you guys is how can we avoid making mistakes? How can we avoid screwing up some of the stuff? You mentioned something about the angels ecosystem, taking too much angel money. One of the things I often come across is small startups, getting 5 high net worth angels, and then boom, and then they go nowhere. What are the other things? Engineering, talent, links to universities. What are the other things we should do?
I would say the mistake you could make is not making mistakes. So you got to get out there and try things and do things and just take risk, because you're going to fail, and that comes with the business. Every time we make an investment, early stage, we know has a 50% chance of going bust, and we know that, and it's tough, because, but it comes with the business. But for every 2 or 3 or 4 that go bust, one becomes a Shazam or an OLX or Datanomic or whatever, or Endeca, which we sold for $1 billion 2 years ago. But you got to just take the risk, and that's the thing. The mentality in California. There's no social security, man. You don't have a job, you don't have money, you're not going to get anything. So people are just, whoa. And actually that is coming, that whole situation's coming more a reality in Europe as well, right? So take some risk.
What are the common mistakes you see, Rob?
I completely agree with Nenad's point. I think the other risk is getting sucked into the 1,001 ways to waste time. As an entrepreneur or anyone involved in the tech scene in Europe.
Like going to conferences?
Going to conferences, for example. Going to conferences, reading TechCrunch, reading Twitter, all that kind of shit. Stop doing that. Focus on your startup.
No, keep reading TechCrunch.
Sorry, obviously. But yeah, look at Federico Marchetti, founder of Ukes, right? He doesn't speak at he speaks at one conference every 2 years, right? You never see him. He's not engaged in the tech community. He's just getting on with building a $2 billion company. He's very focused on that. And I think, yeah, you have to surface for air occasionally and get different ideas from people, but really keeping that to 2% of your time and 98% of your time, really focus on what it is you do. I think that's really important. And Berlin, I think, is an example of, and certainly London is an example of where a bunch of entrepreneurs get far too sucked into drinking.
So lock yourself in a room, don't go out, build the company.
Yeah.
Yeah, and when it comes to Italy specifically, I mean, there is a way of, when something looks successful, everybody wants to do the same. So we have seen large companies that instead of buying startups for filling the pipeline of innovation, they are launching incubators and seed program, which is totally nonsense. How can you run a seed program out of a large company like a utility company? So instead of trying to cover what someone else is doing, trying to focus on what is very good you are at. And if you're a fund, focus on doing a fund. If you're an angel investor, you can invest in money. If you're a large company, look at the pipeline of technology companies coming out to buy those companies, not to launch competition, which is purely marketing, doesn't add any value to the ecosystem. So trying to build the ecosystem, which is important. I think that even in Italy, we have all the building blocks of the ecosystem, is trying to put them together and working in the right way.
One of the things I often see for entrepreneurs is is they need mentorship. And one of the things that VCs often bring to the table, experienced VCs who've built companies, exited them, helped the entrepreneurs, worked on boards at board level, is building a network of mentors around their investments. Often entrepreneurs seem, especially if they're new entrepreneurs, get people involved who kind of have done stuff in tech and haven't, and what's your advice to new entrepreneurs who are trying to build a handful of advisors and mentors and need mentors to build their company? Should they give out tons of equity to these people? Should they, or should they kind of go to the source and try and get mentorship from experienced VCs, etc.? What would you think?
My view on this is less is more. So I think the best thing you want is 1 or 2 people who are going to spend a lot of time with you, a day a week, really get to grips with the details, and you want them to invest their own money, but then have an equity stake in the business. So you're not giving them equity, but you want them to invest a bit of their money.
You want skin
so
in the
they
game.
got some skin in the game. I think, honestly, the value add from a VC who spends sort of an hour with you a week or a couple of hours or even 4 hours is tough. If there's a VC who can really spend time with you and get really engaged, I know, for example, Roberto on Wooga spends a hell of a lot of time with that company, then that's great. But often I want a bunch of boards, and my contribution, the contribution of the other VCs in the room, when it's a sort of a board meeting once a month, it's kind of a waste of time. It's good for networks and introductions and that kind of stuff, but in terms of actual mentoring, you need someone who can really commit.
Yeah, I guess I think the role of the VC is really a facilitator, and our network. The idea is we bring people to the portfolio company. So, for instance, take Shazam for example. I brought John Sykes on the board. John is the founder of MTV. So you could not get a better guy for music. And then we also put Brent Hoberman on the board, who's one of the top entrepreneurs in London, also has experience taking company public. So I think our role is really to be a headhunter of sorts. And if you look at Kleiner Perkins, they even have a division that just basically does HR recruiting for the portfolio companies. And then also, helping with biz dev, and then obviously the capital and the strategy. But yeah, I think Rob's point, you cannot expect the VC, unless it's someone like Monty, who's in the room somewhere, and you're building a database, then there's no better guy in the world. But not every VC has done that, and Monty probably is not the right guy to talk about e-commerce. So it's very hard to get all those skill sets in one guy, and you should get the best guy for whatever you're trying to build.
But keep the level of advisors low.
Yes, of course. Well, I've seen one CEO set up an advisory board, and he gave him $10,000 worth of options, and he got introductions to clients at all these banks, and it was the best investment he ever made. But not everyone's that creative, but he was very good at it.
Depends on the entrepreneur, perhaps.
Yeah, I mean, what you have to look for if you're an entrepreneur, definitely skin in the game and background. I mean, you don't become overnight an investor with track record or something that can really bring value to the portfolio companies. So you really need to look for someone that has really experience and skin in the game to get the really value out of an investor. On the other side, make sure to get the capital table right, because otherwise if you don't pick up the right people, you have to add people and people and people, and at the end of the day, those cap table will look very difficult to make investment on top of that. So definitely, we in an ecosystem like in Italy, a VC fund try to cover all the kind of skills that are not present in the founders team at the beginning. So we, as he was saying, basically try to connect those people who most of the time are very savvy in technology, but they are lacking go-to-market capabilities, to connect and to plug those capabilities into the market, which is the core competence of the VC, I think.
I think it's important here to really cooperate with your competitors. So I think there's sometimes an attitude in Europe.
Sounds counterintuitive.
So there's definitely an attitude sometimes you see around Europe, which is, I can't tell you this without an NDA, or I can tell you this, but I'm going to hold this back, and I can't tell you about this because you might tell my competitor. And certainly, yeah, we're not going to talk to this guy because he's also doing e-commerce, which is focused around fashion, so I'm not doing that. And the reality is you've both got 0.0001% of the market, and you're taking on the big incumbents. So sharing that knowledge between you. So I take Wooga, that's a gaming company out of Berlin doing mobile games, and Natural Motion, that's a company out of London doing mobile games. They talk all the time. In theory, they're competitors, but in practice, they're always comparing notes, sharing ideas, and getting that sort of cross-fertilization, I think, is really important.
I'd just like to, back that up. I mean, time and time again, one of the complaints I hear about the European ecosystem is we just don't share enough between each other, and therefore we're just holding ourselves back. I don't want to make too heavy a comparison with the Valley, but those guys do share knowledge quite a lot with each other, and even if there's a phrase for it, it's a rather terrible phrase, but called co-opetition. In other words, you're cooperating, even though you're competing, you're also cooperating, especially if you're both all in the same boat, being a startup, and you're trying to disrupt a big incumbent, as Rob said. I'm going to ask these guys another question, and then we're going to use the remaining sort of 5 minutes of time left to let you guys ask these guys a question, because we've got some great VCs in front of you, and you might have a question that you want to ask. And by the way, don't worry, any question is fine. It doesn't have to be a complicated or sophisticated. You don't have to look good. Just ask just a simple question like, how do I reach you, or something like that. Simple. So, but last quick one. What do you look for in founders? What's the ideal founding team, and what qualities do you look for in a founder of a company?
The ideal founding team is 2 founders, one of which is technical, with unequal shares of the business. But I don't really give a shit. We've invested in companies with 4 founders, with 6 founders, with 1 founder. What do we look for? It's complete focus and speed. Speed of iteration, speed of taking things on board and changing. I think it's really important.
I mean, first of all, talent, technology savvy, and able to make it happen and to navigate the up and downs of a startup. So basically, those are the 3 main topics that we are looking for in an entrepreneur.
Pretty similar, intensity, intellect, and focus on what they're doing. You're going to see a guy today, Fabrice, from OLX. He's a guy we backed. I would back him tomorrow with a blank piece of paper. Very few guys like him, and you'll see this guy, the growth this guy was able to produce, and everything he's done is just off the charts. And so that's kind of what we look for.
Okay, any questions? I'll bring the mic over. Can you say your name and the name of your company, and then ask your question?
Angelo, News at Me. Oh, okay. A really easy question. There is a big deal about business plan. I would like to know about what you think when you see a business plan, because, okay, everybody knows that plan A never works and everything about it. And I would like to know when a startup come to you and explain their business plan. What about it?
Honestly, I cannot remember the last time I've read a business plan. I'm serious. It's the PowerPoint and it's the person. And then obviously we ask questions, but usually it's a slide deck, 20 slides, no more. And you better tell me what you're doing in the first 2 or 3. Don't make me get to slide 10 before I understand exactly what you do. Some people just talk about, oh, the guy and this and that, and they don't say exactly what do you do, what problem are you solving. But seriously, I would not waste your time on a business plan.
Slide decks, not business plans.
Slide deck, 20 slides.
Can we just get some quick answers? Then I just want to fit another question in.
I mean, VC are person, so and not any person is equal to the other ones. I would do the same. So I would like to have an executive summary. I try to understand what you do and where you're gonna ending up. For sure, there are other VC who looks more in terms of numbers, but it's not the case for myself.
Same. Go ahead.
Hi, Mike. I'm Gianmarco Carnovale, head of the Roma Startup Association. Just an idea from you guys. It looks like that in Italy, in this moment, we're having an issue on pre-money evaluation of startups, especially at seed stage. My opinion is that maybe these can make in short term better deals to VCs operators, but in the mid and long term, this creates a problem of too much dilution on the founders and not enough money to the startups in order to scale up globally. What do you think of this?
I think in the ideal world, you get diluted between 20 and 30% every round you do. If you get diluted by more than that in the round, then you're in problems. And yeah, it's trying to be capital efficient, and it's also trying to make sure you get a fair deal. And there's a bunch of guys around who have old-fashioned views around how you should value companies. And yeah, you just have to, supply and demand is what determines
What's
that.
an old-fashioned value?
Your business is worth zero because you have zero revenues. Or let's value it, and assuming minimum wage and assuming number of hours you put into the startup, I value your company at 20,000.
Yeah, I mean, often that has been a kind of a European mindset. It's like, oh, you're not making any money, so there's no point in investing. You know, what did they say to Mark Zuckerberg? You know, he didn't make any money for years. Any last questions? Any last questions? We're going to fit one more.
Thank you, Terenzio Cugia of Cinema. I had a question regarding the fact that you mentioned that 50% of companies you invest in fail. What is the typical time horizon of your investment, and do you follow on with a further round of money if, for instance, there's a difficulty in realizing the original business plan?
Sure. Well, let me just caveat that 50% of our companies don't fail, but I go into something in a seed investment thinking there's a very good chance. So you got to differentiate between seed, Series A, and growth investment. So that's kind of where we play. So at a seed level, we're looking to make 10x our money on that investment. We're putting in 250K euros as our standard seed investment. If the company does not meet the milestones that it says it's going to do, we will kill it. We will just absolutely not put more money. Okay? That's it. Series A is very different, right? Because we're expecting then the company has traction, it has some customers. We're starting to see that, you know, people are using the product and like it, and actually it's gotten the first iteration of bugs out. So then obviously you're looking at a much lower loss rate, right? Maybe 25% chance of failure. And then growth, you know, growth for us is almost, you know, if it wanted to slow down, it could be profitable. And there we're looking very low loss rates. So that's, it depends on the risk return level, right? So.
What sort of time span? 5 years, 6?
It depends on the company. I mean, you know, some of these companies can take off like a weed. You know, OLX is a good example. These guys, actually Vindeln in Germany, this company, we put the seed financing in. They did their first quarter's budget in the first 2 weeks of launch. They did the first year's budget in the first quarter. And so we accelerated. We went from 250 and we now have 10 million invested within about 30 months. So that one went very quick.
Yeah, complete range. We were Bebo, it was 2 years. Software companies like OpenNet and Globoforce, we've been in for probably 10 years. There's no rush.
Well, ladies and gentlemen, I hope that was interesting and informative. We'll obviously be around today, so see you later. Thank you very much to our panel.
Thanks, Mike.
Guys. Have a seat there. All right. Very good.